Yes, guys, what's happening? So, in today's video, apart from freezing my chuddies off, I'm going to be breaking down two moves that I caught, one on gold at the London session and one on NQ at the New York session. So, without waffling too much, I'm going to get into the breakdown of the NQ trade, and then I'll do gold after because NQ is my go-to pair that I trade pretty much every day. Just started trading gold and finding that the setups on gold are absolutely clean and crispy. So I'm pretty excited about getting involved with some gold trading with my community. All right, cool. So I'll just do a quick top-down analysis from the top on NQ just to give us a bit of context. I'm going to get rid of some of these things I've drawn on the chart. Do you know what? I'm just going to remove everything. All right, just quickly looking at where are we? We have respected this 4-hour fair value gap here. All right. Now, okay, right now, just looking at the dealing range, right? Minute. Right. That was what was quite important about this trade, right? Is that this bullish fair value gap here has been inversed and violated. Right. So it kind of gave us a bit of a bearish bias. So when you go down to the smaller time frames. Right. Now, just marking out the unmitigated areas that price could have been looking for here, right? So just off the bat, like you've heard me speak about BME cycles before. I'm going to draw the current BME cycle that we are in. Sweep and then extend, right? But in this scenario, it was the sell into the buy area, but the buy might just happen tomorrow. We did inverse this 4-hour fair value gap, right? And then we tapped back into this one. So literally, now I didn't catch this at the open. I was just watching, right? So structurally, we're going up, right? Holding off of this, yeah. So this was a strong draw on liquidity. This was priced to come down here and take out this Asia low, which it basically did, right? So let's get this. Now you've heard about me speaking about BME cycles for structure, for direction, and then you've heard about me speaking about BME cycles for entries. But draws on liquidity are pretty much your targets for basically where you're trading from. Now I've got a little trick here. I've got my session indicator on. This gives me the basically the highs and the lows, but it doesn't like leave them on the chart like the way this one does. So I add 2, and then what it does, it gives me the highs and the lows that haven't been tapped into. So basically in this scenario here, this was your drawn liquidity that price was looking for, right? Bang. Okay, so this was the Asia low, right? So price had a reason to come down here. We also had the New York low here that didn't get a touch. Price ran straight into it. New York low. All right, so these were the main draws. What else? All right, so okay, let's keep it up. Right, basically, market had already mitigated up here. All right, I think you had a 15-minute fair value gap here. Yeah, we did. So basically, price is in a downtrend. It's BME'd on the failure of this one, right? So the fact that basically this hasn't held, right? Price has come down, taking that straight out. So now you're in a downtrend. Now, just looking at a bearish BME cycle, this would be a mitigation zone that you broke structure. You come back in, you've swept, and then you've dumped down to make a new low, right? So this here is a failed BME cycle. Bang, right? Took that out, went back up, bang, came down to here, right? Although on higher time frame, looks like we had somewhat of a bullish. If you go into the higher time frame here, this becomes higher time frame BME, right? So this one's failed to come down for this one, higher time frame. All right, so although I didn't catch this, I'll tell you what I did catch, right? So one thing that I used to do when I first started trading was if I saw a massive impulsive push down like this is basically a correction, like a massive reaction in the market, I would do what a lot of people did. I'd try and catch the bottoms. So I'll be going on a smaller time frame and I'll be blind and oblivious to what's down here. And every time I see a wick like that, I'll be trying to take a buy. Right there. And I'll just keep trying to take buys at every pullback. And I used to get wrecked. There, look. All of these buys, all of these, right? So this is what newbie traders are doing. This is what I used to do. Trying to catch the bottom, right? Fine. This guy, he caught the bottom. This guy, right? But then he had to hold through all of that. Look at that. The move's over. This is stress because this doesn't have a direction. This is a load of nonsense. So don't do that. But my go-to reaction to something like this is to take a continuation down. The market clearly wants to push down, right? So I literally jumped onto the smaller time frame and I caught this play. So the push that I caught was this push down here, right? I took this to the 50% of this and I'll show exactly how I did it, right? So what I did was price was down here, it came back up, it made another low, and I was like, okay, cool, well, it's hit the target, which was the draw. New York low here got taken out. Asia low has been taken out, right? So it doesn't have, it might want to go lower, but we have kind of mitigated the errors. We're kind of at TP. But I do know that basically price could basically come back up and then make one more leg down or at least get to the 50% of this. So you're going with where the pressure is rather than trying to catch the bombs. So on a smaller time frame, I look for the most recent sweep, right? Which is this one. I'm going to go on 15-second chart just to get a bit more data. Right. So what you're looking for is the most recent BME cycle or the most recent sweep and push. So this gives me my mitigation zone, this one, right? Because we've taken this out, right? So this is now my protected high. All right, so, and that's my break of structure. You know what, like today was one of those days where like you literally, this was easy. This was like, I've practiced this so many times that when this was happening, I even thought, wow, this is a little bit too easy for once. And it literally just made me feel so confident because I was like, you know what, this is why I hung on. This is why I stayed trading for days like this, for it just to be easy for me to be able to read it like a book. So I'm just marking out the liquidity. And I'm just going to explain what I'm doing right now. Okay, cool. So looking at this, right? I was I was down here, right? I was like down here when I basically decided, right, I'm going to take a continuation sell. I was expecting this to make a new low, but I'd realized we've hit the target, but I do know it would kind of at least get something coming down, and I want to go with the pressure. And if you can see all this choppy movement towards the upside, and then you just see this nice push down, that's exactly what I thought was going to happen. That's exactly what did happen. Right, so going to jump back onto the 1 minute chart. Now, this is my protected high, right? This high here. Price has broken down here, tap back in, right? Hasn't taken out these highs, right? So what this has done, this has created liquidity, and this is exactly what price was coming back for. Tagged in and extend down, right? So this is literally a BME cycle. I'm just going to jump back on the smaller time frame just to get there. All right, so let's draw the BME cycle. Bearish BME cycle, bang. Okay. That's the first tap back in. Got another tap back in, but it didn't take that out. So this just created liquidity basically. Down again. This didn't even take this out. Now, when prices come up here, sorry, down here, it's traveling back and it's taking out all of the liquidity above these. Now, when it started to consolidate near here, all I was looking for was an inverse fair value gap and a dump, and it literally just went boom. So all of this, this is just engineering liquidity to sweep. And I nearly got tricked out because there was a few scenarios where we got an inverse fair value gap. But I needed it, I knew it needed to basically consolidate a bit, push into that, trick everyone, trap the breakout traders, and then reverse on them. And it literally did the exact same thing. So when you see consolidation near resistance, yeah, it's a good sign because basically price is going to engineer liquidity, trap everyone, and then reverse. So I don't know if you've heard of the concept AMD. That's basically what that is. Accumulation, manipulation, distribution. So all the AMD traders would have seen that and taken that. Right, so you're looking for an inverse fair value gap, which was right there. And funny enough, it swept this last bit of liquidity, which was the first tap back in that didn't get taken out by this high, right? So like, I don't know if you see traders draw this. They put like this here, right? This is what this is. It's liquidity. It's waiting to get taken out, right? So price can go anywhere up to here. I mean, you got the 50% of this actual whole zone here. Price didn't quite make it, but it took out what it needs to take out to get its push down, right? And even though this push down didn't even make it down here. So what I did was I marked out the bullish fair value gap and I just waited for price to inverse it. And we smashed into there with a nice bearish fair value gap, which was the signal. Actually, that's where I got in, right? And then price respected it and pushed down even more. So I could tell the order flow had changed, right? Order flow had changed. We've gone from bullish order flow to get up to here, and then we've changed. So price is now heading down. I did panic a little bit when it pushed back up here, because it literally inversed that, and I was a bit like, shit. But my stop loss was above here. So my trade was this. I got in there. I put my stop here above this high, but there's nothing really more for it to come for. So to be honest with you, I was panicking when it was coming back up here, but I had my stop in the right place, so it's there. And I was targeting. So yes, I did. I was hoping that it was going to come and at least take out this low here. But just to be conservative, right, I just got my traditional fib and I drew from the high to the low with my traditional fib. And I literally just put my TP at the 50% mark, right? So on this dealing range here, if we were going to go back up, we're going to get a bounce at the 50%, which is here, right? And then it did actually come back up and then drop down to the 61.8. So, you know, at this point, I was a bit like, oh, this could actually go. But then it kind of almost swept that, came back up, couldn't break that, had to go lower, swept that, came right down to here. But I'm not trying to hold through all of that. That's just stress. I just want that nice push into there. So that is the first tap. You know, after prices return to this area, it's taking liquidity out. That's a powerful push because it's the first time it's coming up to basically after this, all this, first time it's coming up to actually sweep this liquidity and push down. So that is my strategy. That's called a BME cycle, right? That is basically what I do. This is the pattern I'm looking for every single time. And that's because I want this extension. I want this move here. This is what I'm looking for every single time. And then again, with the TP and just being conservative, I took it down to the 50%. Because I knew at that point you're going to get some kind of a bounce, and it literally, okay, it went down a little bit further, and it bounced. It didn't break this high. It needed to go back up, and there would have been somewhat of a BME cycle here after breaking this. It's come back up. It smashed into one of these little blocks here after a breaking structure here, and it's got another extension. So, but the first move is going to be the most powerful one. So I'm not really trying to catch this or hold through all of that. That is long. Forget that. And definitely not through all of this. Just from an extra from where I got out there. Just an extra bit of movement. All that stress for that. No, I'm good. So yeah, that was my trade. That's exactly why I TP'd where I TP'd. That's why I entered where I entered. Yeah, and just looking at the higher time frames. This was an unmitigated area. Sorry, there's also this. So when you break structure and you push out, this first touch becomes liquidity, like I marked up on them other ones. So this was also a downside target. So there was a lot of reason for price to come to here, but I didn't catch it at the open like that. And if you want to get into this play, I think there was a news wick the price came up for, but can you see in the London session? It was actually in the London session. It came out, mitigated this, took out all this liquidity. And I mean, I can actually draw the BME cycle there as well. On the fact that this one failed, right? So that's the breaker structure. This is the first tap back in after breaking structure. This becomes liquidity. Price kind of created an equal low here. Sorry, equal highs here. Right? This becomes, again, liquidity. Chopped around, shot into there before the New York Open. Took all this out, smashed into somewhat of a mitigation zone. Yeah, smashed into the 50% of it. You've got your higher time frame inverse fair value gaps here, and then bang, literally shot down at the market open because it's got what it wanted. So the next draw on liquidity, it's already swept it. The next draw is down here, so it's got no reason to go up. I didn't catch this, like I said, I didn't need to. I still ate. I still got a nice portion of this move. I think I made $400, so pretty happy with that. So yeah, that's my breakdown of the BME cycle. There are other confluences, but like I said, I just spoke about the move that I caught. It was just a continuation on a massive correction, basically, in the direction of the correction, right? And it didn't even make it down to here. It didn't need to. I got to 50% and I was done. So yeah, that's it, guys. So I'm gonna upload this on YouTube now. If you found this video useful, then please like, subscribe, and share. Yeah, and that's it from me. Peace.